You clicked on this video because you already know what an inducement is, but you are still a bit unsure which ones actually matter. Here's the truth. Inducements happen everywhere. Every time frame, every session, every market. And that's exactly why so many traders get trapped. Most traders treat every low or every sweep as if it all carries the same weight, but only one of them signals where the real move is going to start. In this breakdown, I'll show you the exact difference between a relevant inducement that matters and the noise inducement that tricks retail traders on a day-to-day basis. As always, we're going to go through a real case study, candle by candle, and I will show you how timing alone will filter 90% of the fake inducements. So first of all, what is an irrelevant inducement? Inducements happen all the time in every session and in every time frame. We're going to be focusing now, as you guys mostly will be intra-session traders, on the M5 time frame. And before even jumping into M1 for my entries, M5 becomes my home or my place to analyze the market on an intra-session perspective. So now, when you're in M5, things can get even more noisy, and that's why I focus M5 to explain to you what are irrelevant inducements. When you jump in time frames like the daily, price action looks way easier to understand, but once you start dropping time frames, that puzzle becomes more and more difficult, right? The reason I'm mentioning this is because when we're gonna be now speaking about inducements on M5, you're gonna see a bunch of them. What do I mean about a bunch of them? For example, let's start selecting a few of them here on the screen. You will be able to see, okay, this is an inducement. You can also see that this is an inducement. You can also see that this is an inducement. You will also see around this area that this might induce this point, and in here you will also see how this is inducing this point, and then you come here and you see this area is inducing this low. Then you're going to the upside and you're seeing this area inducing that high. So inducements happen everywhere. They're just a matter of how price moves, is to understand that they're the fuel of the market. It is the reason on a moment given in time why price will move from a point A to a point B. Just because we can understand that mechanic of the market, that doesn't mean we're gonna be trading it. There has to be a difference on what I know I can spot on the market versus what enters between my trade model or the thing that I actually want to be executing my trades. So with all of this in place, okay, and explaining about all of these random inducements here and there, how I can actually benefit from inducements and how can I remove all of this noise that we've been speaking about and actually understand better areas of inducement, and we can correlate them with the exact time. The first thing that I would recommend on our path to understanding inducements a bit more in depth and better, and how to actually pick the relevant ones, will be understanding market structure. Market structure is extremely important because it's going to give you the direction of where price actually wants to go, and market structure will allow you to not get confused by these little inducements here and there that can actually happen once they've created, for example, a new hard high. You will see situations like this one, right? Like right now, what we can see in price has made a move to the upside, right? And if we want to speak inducements based, you can see how we have equal highs. You have an inducement and you have an inducement. But just because you have these inducements in here, that doesn't mean we're going to shift our overall market structure. Anything that steals pullbacks inside of our main push here will still be a pullback. So now that's why market structure will also clean a lot of the noise that inducements on lower timeframes can give you, because you're not just gonna focus on points in price very specific like this, because you're not gonna just be determining your market structure by these areas in here that now we break in here and now we are gonna be bearish forever. This is just gonna be the start of a pullback because you understand that this is your overall direction. Okay, so the first thing, or the first tip in this scenario, is going to be to understand market structure or direction. So if we go in here and we see where was the last point in price where the market made a push, you always need to select it. Always select that point in price. If you come to these lows in here, you will see it's the same thing. It also made an inducement. It also made an inducement. It also made an inducement. But we need to understand where the market structure started. So market structure is this last push. What we can see in price, the market came to this point in price in here, and when it tried to actually create new lower lows, which is naturally what the market should create on this scenario, we can see how he basically broke to the upside. And we can see, of course, if we understand a bit more accumulation orders, we can see how this also naturally makes sense because we're having a range in price. Price accumulated a lot of orders. And after that, what happened? This point in here created my new push. So now we have what we can call, and I'll put it in here with this, BOS, a break of a structure. So once we have these accumulating orders in here and such a big push to the upside as a market structure, anything that we try to look into these minor inducements on M5, on these top areas to keep buying, is just going to be very difficult to catch. Because what will we know naturally that how does market behave? After each push, we should get a retracement. So trying to be buying inducements in here, as I was explaining, or this area, or any point in here that is actually inducing on a smaller time frame, you're just gonna be trading the noise. But on the contrary, if we truly understand how the market moves, and now we have a new market structure being displayed to the upside, as we can see in here, okay, we had a bearish market, now turns into a bullish market. The only thing we're gonna have to identify is which ones are the lows that we're gonna have on the way of our retracement. So a retracement in the market will be anything that is able to pull back, okay, inside of my point A, which I'm gonna put in here. This is my point A to my point now B. Okay, so this is basically our leg of expansion, our market structure, okay, our last higher low that created the high. So anything that can actually make a pullback between these 2 points is just going to be a retracement, and we can actually expect to look to buy into bigger expansions again in price. So anything that comes in here, I'll be looking forward to buy the market, and I know I can buy pro trend. I know I could hold my positions a bit longer. So all this explanation of market structure is going to give you the whole perspective of like, okay, Alex, this is amazing, but now how I can focus on inducement, which is what actually matters. Well, I've already described which ones you should not focus into. And now that we understand where is the point A and is the point B on our latest push, let's get into putting lows in price in here. So now, what are lows in price that could be actually relevant? I'm gonna make them a bit thicker, and I will put different colors. Okay, I'm gonna put a red one. So now we're gonna play a little game in here, because this is something that I've seen that is challenging for a lot of people and they actually misunderstand. So as we said, this is our main push from A to B. And now look the amount of lows that you have here, like the red one, the orange one, the blue one. And now inside of that main push, which is on a bullish market, we said that we want to look for buys, but anyone that understands inducements knows that it can be any sweep of one of these lows. Check, you have the red, you have the orange, you have the blue, you have the purple, you have the yellow. How many of those you have? Which one is going to be the one that actually price will react from, right? So I'm going to leave 3 seconds in here as a little game or quiz, and I want you to think on your mind which low is the one that you think is actually the one that will react from. Is it the red? Is it the orange? Is it the blue? Is it the purple? Is it the yellow? Amazing. So if you've picked the red, it's incorrect. If you pick the orange, it is incorrect. If you pick the blue, it's incorrect. And if you pick the purple, it is incorrect. But if also you pick the yellow, it's also incorrect. Anything that you think price will go specifically to that point, and therefore you have to look for buys. If it runs the Asia low, therefore it's gonna be my red one. If it goes there, I'll buy. Why specifically in that point? Why not the orange? Why not the blue? Why not the purple? Why not the yellow one? Okay, so extremely important to understand is that we don't want to guess a low. Okay, and this example is amazing because I see this also a lot with POIs, which could be another video in itself. But just for understanding inducements today, as I said, the one that will make the most sense is the one that will come alongside a last point of confirmation. So now let's just slowly see price. We can see, for example, right now you're creating an inducement in there. And look what's happening right now. If you pick the red, what did price do in the moment? You see, made a rejection, same with the orange, and push high. Now look, you're on the blue one, okay, potentially also making a rejection. We still don't know. Okay, so if you're just trying to pick a low and think, oh, this is the one that price should reverse, it's not gonna be that efficient. You need to have that last point of confirmation that you guys are seeing, that is already appearing on the screen, that is gonna be our moment in time. So right now we can see, look what happened. Right now we are on the open, in this case of New York, and we're actually now inducing the blue one. So now when I have my inducement being confirmed by the correct time and understanding, okay, very importantly, I'm understanding that we are on a bullish market, so this has already been my potential retracement, then that's how can I actually predict that on this moment and given time is where my important event of liquidity is going to start. I like to call it auction of event. Okay, it's the moment that I can call it like we ring a bell. This is the moment where actually we can speak of, okay, this is my time to buy. Okay, this is where institutions, big volume will be interested on, and this specific low has been also validated by time, and that's how we can actually or potentially see a new push to the upside. And we're gonna see what happened next, and we can see also, look the volume in the market and price. Do you realize how much volume it comes into the market, how much inefficiencies are coming through the exact point and price? So then if you choose at the beginning blue and you were just guessing on your mind in the, it's a guess, right? I didn't know either if it was gonna be the orange, if it's gonna be the red, if it was actually going to be the blue, if it's gonna be the purple. What I actually knew is that I had a push, I had a retracement, and therefore I wanted to be a pullback inside of my main push on the correct given time, and I know this way I can also try to catch a bit of a longer move. Okay, if you see here, okay, we do have a lot of inducements, as I mentioned. Look, we even had this one, right? The push market lower. Can I trade these sort of scenarios? Well, you can, but I wouldn't recommend them at the beginning. Can you actually trade, for example, on areas in here? Can you trade from areas in here? I wouldn't recommend way at the beginning. I definitely think you don't even need it on your journey, and you can just focus on setups like this one, where they will give you a lot of peace of mind and a very nice structure into what to expect into your trading. Now, if you want to be a trader that is already successfully doing it and wants to push it a bit farther, well, you will have scenarios or setups like this one where you will be able to sell and then be able to buy. But sell will be in a short-term scenario because you understand that the market is overall bullish, so it's just a retracement trade. And then the scenario in here will be more a continuation trade, will be more a pro-trend scenario within your bullish market structure. So now things can get extremely advanced and complex as we go lower in time frames, more noise appear in the market. So we need to be very careful on inducements surrounded by noise, and the inducement that gets validated with time and validated with market structure, for us to be able to pick the correct one, the relevant one, the one that actually has meaningful moves in the market.